I'm Lauren Perreault with Fiv Realty, and this is your weekly Portland Metro real estate market update for the Portland Metro area, including Clark County, Washington, and we're using data from the week ending January 25th, 2026. So before we jump into the numbers, a quick confession. I'm originally an engineer, which means I'm a bit of a data geek. I don't love reacting to one noisy data point and calling it a trend. I love patterns, I love context, I love Excel spreadsheets, and I especially love figuring out what's changing before it shows up in the headlines. That's why these market updates go a little bit deeper than the typical, here's what happened last week. I know that I can feel a little dry, and honestly, real estate data kind of is. But I think of that as a feature, not a bug. If you like clarity over hype, you're in the right place. Today, I want to do two things. First, I want to explain how I look at this data, because that's just as important as the numbers themselves. And second, I want to walk through what the longer-term trends are telling us right now, especially if you're thinking about buying, selling, or doing both this year. Let's start with a quick explanation of something you'll hear me talk about a lot: rolling averages. Weekly real estate data is messy. Holidays, weather, reporting delays, and even when contracts happen during the week can all swing the numbers. That's why reacting to a single week is a great way to misunderstand what the market is actually doing. Thanks to the magic of AI, I now am able to analyze all that data really quickly. A rolling average smooths that out. Instead of looking at just 1 week, I take the last 12 weeks of data, average them together, and treat that as one data point. Then when a new week comes in, we drop the oldest week, add the newest week, and calculate the new average. That's why it's called a rolling average. The window rolls forward 1 week at a time. What this does is it filters out all the data noise and lets real trends show up. If something is genuinely changing in the market, you'll see it in the rolling average first. Weekly numbers lag behavior. Rolling trends reveal it. Okay, so with that out of the way, let's talk about what the trends are actually doing. Let's start with homes sold. This week, 247 homes closed across the whole Portland metro area. On its own, that number looks soft, and compared to the same week last year, it is lower. But closings are a lagging indicator. They reflect decisions buyers made weeks or even months ago, especially around the holidays. When we look at the 12-week rolling average of homes sold and track it week by week across the past year, we see a very normal seasonal pattern. Sales slowed through late fall, hit their low point around the holidays, and then, this is the key part, they stopped falling. Over the last several weeks, the rolling average has flattened instead of continuing downward. That flattening matters. In a market that's deteriorating, the rolling average keeps stepping down. In a market that's seasonal, it stabilizes first and then eventually turns. Right now, sales activity is still below last summer's pace, but it's behaving exactly the way a normal January winter market behaves, not a market in trouble. To understand what buyers are doing now, we have to look at pending deals. There are currently 2,422 homes pending, with 560 new pending contracts written this week. But again, the weekly number is less important than the trend. Over the past 6 months, the rolling average of pending deals dipped during rate volatility in the fall, that softened during the holidays, and has been rebuilding since early January. When we compare today's rolling average of pendings to the same rolling period of 1 year ago, the gap has narrowed significantly. That tells us buyer engagement is improving faster than closed sales are showing it. That's exactly what you want to see at this time of year. Inventory is where the market's personality really shows up. Right now, there are 5,602 active listings. That's about 10% higher than this time last year, and that difference matters. When we track the rolling average of inventory across the past year, we see inventory bottoming out last summer, climbing through fall, dipping briefly during the holidays. Of course, people take their houses off the market then, and then starting to rise again earlier than usual in January. That early rise is important. It means sellers coming to market this spring are going to face competition sooner than they might expect. Nationally, inventory is still relatively tight compared to pre-pandemic norms, but locally, Portland metro inventory has been rebuilding faster than many other markets. That's why buyers here are feeling more leverage than what national headlines suggest. You can see that leverage show up clearly in price reductions. This week alone, there were 450 154 price reductions, many of them $15,000 or more. Over the past several months, the rolling average of price reductions rose in the fall, eased during the holidays because they took their house off the market rather than lowering the price, and it's now climbing again because they're realizing they still have to cut. This isn't panic selling, this is sellers adjusting to a more balanced market. Homes that are priced correctly are still selling. Homes that aren't are being corrected by the market quickly. You will chase the market down if you end up overpricing. Ultimately, you'll get less money than you would have if you priced it correctly. Days on the market help confirm that interpretation. Average days on market are now 72, down from 84 at this time last year. That's good. Median days on market are 53, down from 60. When we look at rolling averages, days on market peaked during the holiday slowdown and have been trending downward since early January, even as inventory has increased. That tells us the market is efficient. Buyers are active but selective. Well-positioned homes are rewarded. Poorly positioned homes sit. Pricing data adds another layer. The average sale price this week was $572,504. Down about 4.6% from the same week last year. The median sales price was $535,000, up about 2% year over year. That divergence has been consistent in the rolling data. What that tells us is that fewer high-end homes are closing right now, while the middle of the market remains resilient. This isn't a broad price collapse. It's a shift in where the activity is happening. Sale to list price ratios support that. Median homes are still selling at essentially 100% of asking price was correct in the first place. The market is no longer forgiving overpricing, but it is still rewarding realism, and those homes will sell quickly. Interest rates are part of this story too. This week, a 30-year fixed conventional loan from On Point Federal Credit Union, which is usually the best rate I can find in the Portland area, is 5.875% with 0.375 points for an APR of 5.963. We're finally below 6. Rates aren't low, but they've been relatively stable, and stability matters. Buyers can plan, they can lock their rate, they can move forward and know that they're going to be okay. So what does all of this mean if you're buying? When you look at rolling trends instead of weekly noise, leverage has been shifting in your favor for months. You have more choices, more room to negotiate, and less pressure to rush. If you're selling, the message is just as clear. The market still works, but it is not forgiving. Pricing, condition, and strategy matter more than optimism. Homes that miss the mark are being corrected quickly. And if you're both buying and selling, remember this: softer pricing on the sale side is often offset by better terms and more choice on the buy side. Over the past 6 months, that trade-off has improved, not worsened. The Portland metro housing market isn't crashing and it isn't booming. It's normalizing. It's a balanced market. And when you zoom out and look at the trends instead of the noise, that normalization becomes a lot easier to navigate. So that's what my engineer brain sees in the data this week. If you want help understanding how these trends apply to your specific neighborhood or situation, you can always find more information by emailing me at lauren@pdxhomesforsale.com or call 503-683-1885. I'm here to help with anything you need. Oh, and please subscribe if you want to get the same kind of in-depth analysis of the market each week. I hope you will subscribe. It helps me and it helps get my data and my message out to more people. Thanks.